Well, hey, good evening, guys. It's Pat Dees, and you're on my channel, Pat's Hall. I wanted to do a midweek update. The last 2 days have been a little bit crazy as far as certain stocks. If you watched my video from yesterday, I talked about Tesla hitting 900 and like 60 some dollars a share, and finished at 880. I actually made a video yesterday showing a certain TC2000 platform, their software, and the stock dropped down to. I predicted it would drop down to 750. I didn't realize it would happen in a day, and that's kind of a little bit what I want to talk about. You know, when I'm giving some of these, you know, I am not a financial planner. This is just things that I'm doing personally, and just based on experience and things. And always keep in mind, if you're an investor, you're not worried about a week or two what's happening with the market. Yeah, you don't want to plow a bunch of money and see the market dump 20% and then lose it. But you don't worry about those types of things because the market does fluctuate. Hello, Jen. How are you? Thank you for stopping. Going over a midweek update on some stocks. I don't know if anybody's heard, but there was a rumor yesterday about eBay getting a $30 billion possible bid, which to me kind of seems actually low, because right now the market cap is 30 billion. So basically there would be no premium. It's actually 30.2 billion. Now I'm going to show you, I'm on right now called TradingView. So I'm using their website today for some of their charting. Let me pull some things up here and kind of show you. They have it rated a buy right now based on moving average, oscillators, and summary. But let me pull up a chart. Now, eBay at one time yesterday, and I'll show you this stuff. Okay. eBay, this is Lyft, which is one of the stocks I follow, but we're going to change the symbol here to eBay. It's got to be a little bit patient. If you guys are watching this on the replay, if you guys could comment below and like and subscribe, I'd appreciate it. You could see here all of a sudden, when the news came out, it was bouncing around 34, 35. The high on January 31st was 35. So that's a 15-minute chart. Let's show a daily chart. Okay, and we can zoom in here. You can see what happened yesterday, and the volume was pretty big. The volume, I mean, here it basically went from like 34.42 to up in the 39.27, and the volume was something like 47 million shares yesterday. So the news was the Intercontinental Exchange says it explored a deal with eBay. Does that mean they're going to buy them? Maybe not. And maybe that's why the stock pulled back today. Sometimes you got to be careful because sometimes when these rumors come out, it doesn't mean necessarily that a stock is going to be bought. It means they looked at the company, they thought about it. But I still think eBay long-term is going to be fine. They just don't have the growth of a lot of these companies, but they make approximately $3 billion a year. So they are definitely profitable, and they're making money. But and that's what you're going to kind of need, I think, to get the needle moving on the stock of eBay. You're going to need outside person to come in and buy the company. I would really like to see Facebook buy it, actually. I think if Facebook bought it, they could connect with a larger audience that is not connected to eBay, some of your younger crowd. I mean, you think about it, and what I like about the connection that I would like to see with a Facebook is that the verification, having a Facebook account and being able to see the person, who you're dealing with. And, Facebook is right now doing their own stuff with Facebook Marketplace, but they're not making no money off of it. Obviously, if they were on a platform where they could make money, it would. But let's look at eBay, basically a monthly chart. You can see eBay back last summer was up in the 40s. So now it's down in the 30s. So it hasn't been doing very well. Now you go back to 2000, 2011. Heck, you could have picked it up for $8. So but it's kind of been the last really 2 years kind of stuck in this up and down, but really in this range. And if it doesn't get a buyout here, it has the potential to break down back again to like 28-ish. Now, if it does break down to 28, I would probably step in and buy. I sold it back at around 42 when Rally Roots came out with the news that the promoted listings was screwed up and they were having glitching and stuff like that. And that's when I sold it, and I'm glad I did. And I shorted it. Right now, I currently don't hold nothing with eBay. I had a put. I cashed out of it today or yesterday with the rumored buyout. Yeah, yesterday. And basically, I think I might have lost $10. So it was no big deal as far as that. If you guys are joining us, my name is Pat Dees, and you're on Pat's Hall channel. What this Hall stands for Health and Wealth, where I want to discuss some of the things that I've gone through with cancer and focus on doing something with losing weight and getting healthier. But I'm going to talk about a lot of money things, business things, and stuff like that on this channel. So if you guys could, subscribe to the channel and comment below afterwards, I'd greatly appreciate that. So, all right, now the next stock I want to talk about is Tesla. Tesla was up huge Monday and Tuesday. But anybody that bought it, which I think there was short covering, look, here was Tesla. Now that's a monthly chart. Let's go back to a daily chart. Okay, here was Tesla January the 8th. Well, even December 31st, 400 and closed at $418.33. Yesterday, it touched a high of $968. Yesterday alone, it had a low of $833 and a high of $968.99. And then in the last couple minutes, it closed down about 80 points. But here it was on Friday at 600, and 632 to basically 970 is like a 50% increase in 2 days. That's just crazy. Had you been one that bought options this day or even this day somewhere in here, you could have put $1,000 into options and easily made it into $30,000 to $50,000, depending upon what strike you bought, because nobody would have thought you could have bought the $800 strike price for easily $5, and it was $970. So that was $170. So you would have made 20. I mean, there are you could have made 2,000, 3,000, 4,000% just in 2 days. But as I predicted, and I made a video late last night and did it overnight, I predicted it, and I had said I could see it dropping back down because it had gone parabolic, and it just really was going crazy. And I felt it would get back down to 750. Now, what I thought today that was maybe we would get some down and kind of fill this gap, and then probably pop it back up into this area again. And then maybe we were going to kind of, if you're watching my plus sign, maybe we were going to come down. And in other words, I didn't think we were going to drop 750. We closed today at 734.70 with a range today of 704.11 to 845.98. So I mean, you're talking about $140 swing on this stock today. I had said that it would probably drop to 750. Which is a target I put. I didn't think it would happen the next day. I mean, it was a 17% drop if you were short the shares, but I doubt you can find shares the short because of the situation of the float and how many shares are actually out there. Because Elon Musk controls a lot of the shares, it probably would have been difficult to find, but you could have bought puts and still made out. For example, if you would have gotten to puts, now puts are being overpriced right now also because they know it was going to correct. But still, probably $1,000 into puts yesterday easily was worth approximately about $5,000. So 1,000 into 5,000 just in options in one day. I would not be a buyer of Tesla here. I think we potentially probably saw the high for the year when it didn't take out 1,000. But again, it did hit 968.99. Again, now this is just my opinion. I am not a registered financial pro, but the pros come out too, and you got the pros saying that the stock's only worth 250, and a week later it's worth 900. You got people saying it's worth 1,000. You got people with it's 2,000. It's really what people will pay. So, you can't always go by that. So, that's the deal with Tesla. I was not in it this time. I was in it on calls 2-3 weeks ago and lost money on it. I had, I think, 530 or 6, something like that. Excuse me, 530 calls, and they expired worthless. And I think I had one contract. I lost about $125 on it. Had I had them the next week, which though they would have been about $6 or $7. So instead of the risk of $125, they would have been like $600-700 risk. But that $600 or $700 would have probably turned into close to $5,000 or $6,000 because it was back in here. But when it broke out, and here I'm going to zoom out the chart. Look at this. This is nothing. This has been nothing but up. To go from in November 240-ish, 250-ish, to go from 250 basically almost to 1,000 is 4 times your money in basically 2.5 months is unremarkable. I've been following Tesla for the last couple years. I know people that trade. That's all they pretty much do is trade key stocks like Tesla, like Google and stuff, and they're making a lot of money on the up and the downside. So there's always money to be made, and that's what you got to keep in mind. There's always money to be made when the market goes up, and there's always money to be made when the market goes down. There's 2 different strategies, and sometimes some of the stuff that I do is I'll do a mix of both. And this is what I'm going to talk about next is Facebook. Today, I actually sold my Disney, and I'll talk about that. I sold some Disney. In one account, I kept some, and one account I sold some because right now I see some short-term. Mario, thank you for stopping in. My Tesla shares are at 757. And now, Mario, did you buy them at 757, or what did you get in at, sir? And thank you for stopping by. I know a bunch of people that have actually been into Tesla. I remember a couple years ago, I read a story. There was a guy going to school, and he had put $10,000. He was going to college, and he had put $10,000 into Tesla options and turned it into $250,000 in a year. And hey, Dave, thank you for stopping. I'm just doing a midweek update about the market and talking about some of the stocks that I've mentioned on here in the past 2 weeks. I talked about eBay with the issue of them maybe getting a buy. Had over 25 stocks at one and sold at 410. Okay. So you had 25 shares at 190 and sold at 410, which is great because obviously you got a more than 100% return because 380 would be 100%. So you approximately got 115, 120% return, which is tremendous. That's where, and I've learned but you really got to watch the market, is understanding options. There's so much money to be made if you're willing to take the risk and go out further. That it was something like if you would have bought, you could have bought the 900s calls like a week ago for this month of Tesla for 60 cents to $1. And at one time yesterday, those were worth $80. And the market dropped. Think of holding a bit. Yeah. Well, you got to do what's comfortable for you. I know Investors Business Daily says basically once your stock drops 8 or 10%, you basically should get out. But the market can whipsaw you back and forth. So I'm not always a believer of that too. I do think we've probably seen, in my opinion, Tesla's high, but who knows? I think more buyers will come in on Tesla, probably in the 600, 620 range. And then it may level out, and maybe for a while we get that up and down, and who knows? Maybe we do push for 1,000. But it's hard for people not to take profits when basically a couple months ago the stock was $250. So, all right, I'm going to talk about Facebook. Facebook just came out with their earnings, and if you could see here last week, the stock was basically hitting like $224, which was pretty much. Let me look back at this chart. Yes, that was an all-time high. Yeah, because it goes back here at 218. Yes, that was an all-time high. I remember buying this. I remember when this stock came out around $35, and I had said to somebody who wanted to buy, I said, "No, wait till it gets down in the 20s." And that's what I remember buying it in the 20s and selling it in the 30s and 40s. I've traded a couple times. The problem is you kind of, I guess scared money doesn't make no money. And it's hard because when you see, look at this, and then it goes up and you guys say, man, one day it's got to come down. And, but they have been so profitable. Here's when it dropped, and think about the 18, and it dropped down all the way to 123, almost a 40% haircut, and that was over the length of basically only 5 or 6 months. So that means if you had $10,000, if you were the unlucky person that bought this for $10,000 in this time period, you basically were looking at only having $6,000. Okay, hold on. Got to close this out. Oh boy, it's asking me to join. I don't want to join nothing, so I don't know if it's locking me out of the screen. Hold on, sorry about that. Let me log in. I can log in with my Facebook. I thought I was logged in. I was seeing the charts, but I already have where I can look at charts with my Facebook account. So, okay, it's loading. Here we go. Okay, sorry about that, guys. We're loaded back up. Hide for now. It wants to always sell you some of the upgrades and the features and stuff like that, which kind of can people that are heavy into trading, you can connect this to your brokerage account and kind of set alerts to buy and sell things at a certain time. But here, if you look at the chart really over last year, look, it broke out, probably earnings here, but up and down, and finally when it broke out here, I took a short position today. I actually sold some Disney because Disney was up after hours last night at $5, and because they talked about maybe having to take a $175 million write-off because of the coronavirus over in China and the disruptions that's happening in Hong Kong, the being closed. But when you think about this, 26 million people have signed up just for Disney Plus, and they estimate they own Hulu, they own ESPN, and they have Disney Plus. They figure right now they have about 67 million people a month signed up to their streaming service. So $175 million is a lot to write off, but really just with the streaming, they're going to make even at $10 a month. Do the math. That's $600 million. They're going to pull in approximately $7 to $8 billion a year just from their streaming services, and that assumes no growth. They're going to be, I read today, they're going to be entering the European market, so there's the potential. just to kind of give you a clue, Netflix has approximately 100, and I'm rounding up. They have 170 million customers worldwide. So even Disney, Disney. I mean, think about that. They have 20. They just rolled out in December, and already Disney Plus has 26 million customers. So even at 7 billion, now the argument is right now Netflix spends approximately 14-15 billion dollars a year on content. Always remember, Disney is always creating content for the movies. So a lot of their stuff that's in their the movies and stuff is just going to be, if you can't afford to go to the movies, it's just going to be a way to capture that customer watching it on streaming and capture the money that way. So I don't really see them spending at the level that Netflix does, because I don't think they have to, because they're already spending on their movies and stuff. And the way they spend money, they'll spend $125 million to do, let's say, a Pixar animated film, but they get hi Carol, hold on. They get their they take that $125 million into it, and they turn it into, $1 billion worldwide. Okay. Hey, Carol, thank you. I think Facebook is the marble of our time. Not sure what that means, because I don't like Marlboro cigarettes. Well, Carol, trading scares you. Don't trade. Invest. Where do you get your stock news from? I read a lot. I read a lot from CNBC. I read Bloomberg, Yahoo Stock News. But the thing is, I think people get stuck into is focusing on too many stocks at a time. Focus on 10 good stocks and stay to that. If you want to focus on like 20 stocks, Dave, the advice that I would give is you would just be better off investing into a mutual fund where you have the diversification. The thing is, when you do that, you're not going to have the ability to beat the market, because mutual funds are pretty much set up to kind of go along with what the market is doing. Typically you want 11 or 12% return. Honestly, since things have changed politically, and I'm not trying to be political here, just basically trying to speak what's going on in regulations and stuff like that, and just basically the confidence of companies wanting to invest and do different things, and unemployment at record lows. The stock market has done up basically 70% in the last 3 years. Okay, the market was quoted as being up 70%. Now I'm beating it. I'm up. When I say I manage my older son's account 108%. So I'm beating it by 38%. I do some trading a little bit in my own account, and I do more options in my account. Now, my younger son, who works for General Dynamics, I will be starting to manage his money also. And I'm working with a property owner that is invested into probably 20 real estate properties. And I've been showing him over the last year the opportunities that he's missed in the market. And he is approximately about 40 years old, and he wants to, I'm trying to basically set up a plan with him to have even retirement down the road, to kind of show him that, you want to be diversified. He's into real estate business, and stock market should definitely be part of it, because you're not going to get no return in the banks. So going back to Facebook, I shorted it. I think that the stock is, because what happened was they beat their earnings and their revenue, but their expenses are up 50%, because they're having to invest in more security. They're going to get more scrutiny, as people are complaining about. And we're going into an election year, and they're definitely going to be doing ads and stuff like that, because there's just so much money to be thrown at them. But comes with all this stuff, with this scrutiny, comes having to hire more employees, make more investment into infrastructure, make sure that hacking, and really make sure that the Facebook experience is pleasurable to people, to keep them on there, because they have over 1 billion active users. And also, a lot of people don't know this, but they own Instagram. And Instagram has, I like Instagram myself. I just got on it this past year with doing eBay and Amazon, being a reseller on my other channel, Pat D's, Pat D's 72 officially. But if you put Pat D's, you'll still find me. I use that, and I try to keep Facebook a little bit more on my personal side, or people that I do YouTube with and stuff like that. because Facebook has the tendency sometimes, if you let it, it can be negative. But Facebook has had a nice one also. I mean, really since last June, 165 to 220.25 is a huge move. I mean, the 52-week range is 159.28 to 225, and that's the thing too. Is the question was asked by Dave. No, I don't work as an independent broker. I trade through Schwab. I trade through Ameritrade. I just give. I try to give good, sound advice and educate people on what the opportunity is there. I could tell you when I do sometimes buy certain stocks, instead of buying $1,000, years ago when it first started out at $50 or $100 a month, that's what was doing. But now there's times we'll step in and buy $15,000 worth of stock, like Disney. Last year, I think Disney in the one account made about $7,000 or $8,000 profit. So I focused on usually about 10 stocks. Now I will, if opportunities come up, I will trade them sometimes. But no, I'm not a licensed broker and stuff like that. So I would never actually want to take anybody's money. It reminds me of like the Bernie Madoff and stuff like that. You can actually make money just by giving advice and educating people. And there's things I want to do on Twitter. I have a Twitter handle, Dees Options, DEES Options. And obviously doing YouTube here is to kind of show what I want to do eventually is when I get to the portfolio to a big enough size. A lot of people say, oh, you're giving money advice, you're giving stock advice. But a lot of people will give advice and they don't know. They're just talking. They haven't done it. They can't show you an account that's worth X amount. I can show you accounts that are worth a certain amount of money and were started years ago with $500 and has grown into pretty large account, and that's to help my son's future and stuff like that. So that's why I just want to clarify that. So Facebook, I've decided to take a short position. I think actually the market could pull back, but there are going to be some opportunities to pick up. I think people have the tendency to become greedy. If you buy a stock, for example, like Facebook, and you make 15% in 2 months, and then 2 months later, it's back down and you're break even. Well, why didn't you sell that when it was up 15%? Well, people have this in their mind. Well, it's going to go to 300. How do you know it's going to go to 300? What's going to drive it to go to 300? It's not going to go to 300 just because you say it's going to go to 300. There has to be fundamental reasons like earnings, news, buyout, or just really strong growth. But you got to keep in mind, Facebook a couple of years ago was $35. Now it's $250. So you're talking 8 times the money, and it is a large cap stock. So what I try to do is I try to get a 30% return for my son's 401k. Now, how do I do that? Is I try to make 10% 3 times a year. So that example where I talk about Facebook, if you make 15% in two months, you get out of it, and then maybe you look for another opportunity is going to give you another 10 or 15%, or you may, let's say we do get a correction of 10% on Facebook. Now all of a sudden Facebook's down to 180. What's going to happen is Facebook will trade up and down, and I'm showing you the chart. Look at this. This is what traders do, and when they get involved. These they call them swing traders. You'll get people that will buy here, sell here, buy back down here, and they do that multiple times a year. And they might here 170 to 180. Now you're talking approximately an 8% move. But if you do that 10% move just 3 times a year, you have a 30% return. And they basically tell you should be happy with a 11% return. I'm going to make a future video, and I want you guys, if you're watching in the replay, we don't got too many people in here right now on the live. I did this spontaneous. And some people get bored with it. But how it's funny because I have my other channel, and you could talk about going to Dollar General or Salvation Army and selling a $5 dress for $20, and people go wild. But when it sometimes comes to putting $1,000 into a stock that you can turn it into 5,000 in a year, so it's sometimes it's like crickets. So this is why you need to educate people on the opportunity of what exists in the market. There's nothing. I'm not asking no money from people. So I'm not asking no one to send me 25,000. The more people that I get to watch the channel, the more people I get. That's what maybe down the road I might say, hey, I might have a little course for $5 or a book. It's just something to basically throw a couple bucks my way to kind of pay for my time while I'm doing this. This channel is not monetized because I don't have 1,000 subscribers on it yet like I do my other channel. So I really want to build this channel up. But I plan on making a video called The Rule of 72. And what that is how to double your money when you think of returns on, if you're going to get, for example, if you're going to get 30% on the way I do it, you're going to pretty much double your money every 2.5 years. In a mutual fund, it's going to take you 7 years for what I can do in 2.5 years. So pretty much you're going to triple or quadruple your money in 7-8 years than what it would take in the mutual fund. So, hey, Lisa and Rob, I'm not sure who's here. This is Stock Chat, so I don't want to scare you guys off. I know I call a little heck coming in the room talking a little bit about eBay, but I am a trader, and I could tell you I have traded millions of dollars worth of stocks. Doesn't mean I made millions of dollars. There are years back 10, 12 years ago that there was times that one summer I traded close to $1 million worth of stock because I had an account where I could buy $100,000 positions at a time, and I was kind of trading every day. I was doing very well that summer until the market dropped out because of the mortgage mess and stuff. But I've done very well with the market as far as using that money for the ability to buy a house or buy a business. And now I'm trying to educate my kids and educate anybody else that's interested in really thinking about what the market can do for you over the long term. I am short Facebook today at an average of 211. I will probably think about covering at 200, or even 192 would probably be the 200-day moving average, but I may cover at 200. Now, that is still 5% move. Again, those couple 5% moves, they add up. If you have, for example, a person who trades, if they pay attention to the market and they have $10,000, they easily could make $100 to $200 a day. It's only a 1 to 2% move a day. If they did that just 3 times a week, I mean, think about it. Basically, at 3% a week, you're talking roughly 150% a year. Okay, let's say there's a couple bad weeks, this and that, but pretty much you could double your money in a year by not really taking a whole lot of risky moves. I want to talk about real quick, and then I'm going to let you guys go here. On January 14th, if you watch the stocks I recommended, I talked about Disney. It was $144.62. And let me take this off. I'll remove this from, this was the Facebook stock. I recommended Disney at $144.62. January 30th, it was 138, so that was a 4% drop. It's funny because I recommended 5 stocks, and again, these are 5 stocks that I'm investing in, and doesn't mean that these are stocks that you worry about. One of my buddies kind of sent me a message that people lost 25% of their money if they invested into Viacom. Well, not really. It was 15.5%, but that don't matter. Sometimes if you get something that even drops a week or two, and you don't dump all your money in at one time. So sometimes if you get a stock that may, if you like it that much, in other words, don't put maybe 1,000 in one stock at a time. Put 500. And then 2 weeks later, if it drops a little bit, put the other 500. So then instead of buying it all at $40, you would have bought it on an average at $37. And today it was up actually about 80 cents. What happened was with the coronavirus there and the scare and the news, the market had dropped like 600 or 700 points that one Friday. So there was a couple stocks. So in the January picks, I had picked Disney. So right now that's only down as of today, 142, and it's down $2. So you're talking roughly a 1.5%. Walgreens is approximately down $2, also about 3%. Viacom is probably the worst. That's down about $5. And so that's about a 13% drop. I could tell you that's the largest position that we're holding right now. Viacom merged with CBS. There's going to be some synergies there. They are going to make more money as they save costs. They are doing streaming. They own over 4,000. Their market cap basically is $22 billion, which is nothing. $22 billion. Apple, Netflix, Amazon could step in at any moment and buy that company just for their streaming and the content that they have. They have over 4,000 movies. Something like, I did the math on something like that. If they generated $1 million a year, something like, the movies themselves are worth about $4 or $5 billion, plus not including they own MTV and all the other television shows. Content isn't going away. It's just changing how it's being distributed and how it's being bought and where it's being seen. You'll watch CBS. Now Amazon's going to probably get into maybe one day sponsoring you could see, what you'll probably see one day is Amazon Prime members being able to watch the Super Bowl, because if you're a Prime member, it'll be on there. So Amazon has gotten to the television business, but CBS Viacom is making content that is on Hulu, that is on Amazon. Hulu is owned by ABC/Disney. Netflix, they're going to make content for. So if you got content and you're a distributor, you can do it. They're going to be fine. They're basically trading at 4.5, 5 times earnings. That means you could buy that company just with the earnings they are going to make in 4 or 5 years. There's a lot of uncertainty right now, I think, and that's why. And you know what happens is when you see the Teslas going up $100, you see the Google's going up 50, Amazon's running. People are like, they sit looking at a boring stock like Viacom, and they're chasing returns, so they're investing into what they perceive as better growth opportunities and stuff like that. But as far as any good business, it's always going to have a certain value, as long as it's not a declining business, or there's so much, like Ford today has struggled. Gasoline cars are struggling because as they roll out more and more electric cars, that it lessens the demand for gasoline. And it's nothing. People nobody bats an eye at paying $35,000 for an electric vehicle, because a lot of times, even with the incentives that they have, 7,000-8,000 from the governments and stuff like that, you're getting tax write-offs and stuff like that. And people look at it like they're going to, if they save 5,000 or 7,000, you get a state like California where gas can be $5. $3 everywhere else. And here in Pennsylvania, we have the second highest gas tax in the country. People are saving $5,000 to $7,000 a year driving electric vehicles. The problem is with the batteries and stuff, they have a limited range, so you can only go approximately 280, 300 miles, which basically is the average distance that you can go with a gasoline tank. But you need to pull over somewhere. More charging stations are going up. As we get into like the bigger cities, the bigger areas, when we were down in Florida a month ago, there was a lot of places to plug in your Tesla. They're putting them in like Home Depot lots. They're putting them in where you basically go in and you park the car for an hour, and your car come out fully charged. Mario Miranda, I want to thank you, sir, for stopping in. I am going to be signing off here in a minute or two. This video was a little long, but I want to basically talk about what I've talked about before and give full disclosure. Sometimes people put advice or stocks out there, and then they say, well, what happened? Did he sell it? Did he, and people don't tell you that. Or people buy stocks and they don't tell you when they sell it. And I don't think that's fair. That's doing a disservice to the people that are following you. So I really want to be show you in with the honest that all these stocks I mentioned, we are personally in. The next stock I mentioned was TPR. They are the people that make the Coach handbags. That stock is down roughly 3%, which is $1.50, big deal. They should be fine. The issue they could say, and this is that a lot of people are going to say, and even Apple, the short-term mess with the coronavirus they are closing down. So obviously they're cutting their own cash flow for a month or two until they can figure something out to where not, I think it's last count was over 500 people have died from that virus. So. And the last stock was Qualcomm, 9020. That stock is down approximately $2, 2%. They are the maker of the 5G chips that go in your phones, and they do a lot of things. There's going to be a lot of, from what I understand, the 5G is going to be really even that much faster than 3 or 4G, and is really the next revolution in wireless and Wi-Fi and graphics and anybody that's doing YouTube and as we are on our phones and stuff like that. So these are the picks that I'm still sticking with in January. You will see me probably doing about 3 or 4 videos a week on this channel. I'm going to talk about credit cards, talk about real estate, talk about businesses I've done. Really want to get people in the growing this channel that if you're not interested in the market, maybe you're interested in real estate. Maybe you're interested in understanding how credit. Maybe you want to be a first-time home buyer. And here in Pennsylvania, they have a lot of things that you can put 3% down. So if you buy $100,000 house, you have $3,000, and your closing costs, which would be about for $6,000, you can get in a house instead of renting. Now that'll be another video one day. The argument versus renting versus owning, which is better? Well, it's an individual. So those are things I'll be talking about. If you guys have any questions, if anyone's watching this or you want to reach out, please comment on the video below. I would appreciate your support. I would appreciate if you guys could share this, like it, and help me grow this channel. I really want to concentrate on. I'm still going to do my other channel, but I would really like to do 3 or 4 videos a week on each channel, with this one really getting into depth about the money and investing and stuff like that. So I appreciate everyone's time. I hope you guys have a great night. My name is Pat Dees, and thanks again for your support. Bye-bye.